Hi guys, today we're here with Ivan, GBI,
Hi everyone.
ex-CMO of IC Jobs, CMO of LTO Network, famous meme person on Telegram, runs Lobsters, is that correct? Unofficially.
Yep. And the worst trader ever.
And the worst trader on Crypto Telegram. I'm here from CEO of DAO Maker, Chris. Ivan, would you like to introduce yourself a little bit more?
I think your description was very kind. Thank you. Yeah, I'm on the side of marketing community, a little bit of product recently. So I'm the public person doing all of these things.
Mm-hmm. So in honest crypto conversations, we're not going to have an interview style kind of conversation. We're just going to have talk between two friends. Me and Ivan know each other for almost over a year. Pretty much over a year. We initially started working together on LTO, and we're still big fans of LTO. And I personally see Ivan as one of the few people in the space that has a very clear vision about how crypto works and has an idea for himself how crypto should work in the future. And that's something that we would like to discuss today, and a few bullet points. So generally, Ivan, what do you think about crypto 2019 for ICOs, for ETH, for Bitcoin? What is the pain points? Have we reached adoption for what you came out to set in LTO in the beginning? How do you see it for you and your competitors?
Yeah, LTO, or just I can also be market generalist.
The market generalist. Exactly.
Yeah. I would say if we talk about ICOs and fundraising, what showed in 2019 is that because the secondary market, meaning trading on exchanges, has been dying off in terms of volume and the amount of people can sell or buy, that had significant impact on the primary market. So first the private sale got impacted, and then even the seed rounds, because usually how it goes with fundraising from the traditional markets is that someone buys cheaper, right? Company increases and goes up and up and up. In crypto, it maintained the same pyramid, but without any kind of justification for that. It simply was like that. So that question we can leave for later. Anyway, 2019 was fundraisers, as everyone expected. If a secondary market project before was 30 million, now it's 10, you cannot just say, I'm going to raise 10 as well. You always have to aim lower. So even on Launchpad, you see the numbers constantly going down. Yep. Like it started with 7, 8, then 5, now the closest one is 2. Exactly. Yeah. And I think it's 2 is a decent number. I think 2 depends on the project. Like I don't think Binance should go much below, because then overhype can actually be a problem. But around 1.5 to 2 for Launchpad seems good. If you're not doing Launchpad, you have much less access to investor base. So you probably have to aim at 1.5. And if you're really not known anywhere, I think your number should be below 1 at this point. Of course, if the market changes and the secondary market becomes more healthy, you can look at it to raise it again. Because valuations, as we know, even if there is no justification, people look up to them for whatever they try to calculate. Yeah. So anyway, that was one of the trends. Fundraising was less. There was more focus on equity, because before in crypto VCs, or call them pools or syndicates, whatnot, which most of them were, they were more or less global. And then the shift happened towards really being where the capital is more risky and people are okay taking risks, meaning equity deals in Silicon Valley. So a lot of the projects which are really doing not the protocol level, but more like the UI, the applications themselves, with some vendor lock-in to an extent, those had success with fundraising. So those are fine. But of course, it wasn't too ridiculous, right? It was more real towards the companies, how they could fundraise in the first place. Yeah. Just with the focus on crypto.
Equity makes sense for crypto companies? What do you think about
it? Depends. So if you have a protocol and if you just raise equity, it depends what you raise equity for. Let's say, just to make an example with LTO, like we built the open source system and we bootstrapped the network. And now we have many integrators and they're growing in numbers, building on top. So in that case, every integrator has a revenue making equity model by themselves. And then it's okay to raise for one of them, because the more you work, you have to acquire the token to actually pay to the network, because it delivers value. So in this case, it does, yes. Yeah, but if you just raise equity while you are just an open source, let's say you're an outsourced company for building applications, and you are just only one, we've seen many times it doesn't really make sense. But most of the projects try to ship layer 1 and then transition towards some applications and equity model and work on the protocol. Yeah.
So the way, for me, I think a token can work better than equity, depending on how it's built. Because if you have equity, what you have is a jurisdiction and a bank account. So you first need to register your company to get a bank account. And then this jurisdiction has transparency to your bank account. And then with these two objects closed, you can go to investors and be like, look at our financials. We would like to raise it at 10 million valuation. Here's our valuation financials. Now, if you run your company, and as long as you're not publicly trading, your investors, you have very little transparency towards your numbers, right? If you give them profit share, if it happens, and you say, okay, you get 10% profit share from our money, then these investors have no insight in if that happens or not. Therefore, you need equity because you need a jurisdiction. They can go to the jurisdiction, then ask the bank, is it true? Or are they lying to us? Are they about to be broke or not? With tokens, you don't need any of this because you can program with smart contracts unstoppable code, which means if you build a framework and say, okay, this goes here and this goes here, the money will flow to my token. And if you can validate this on the chain through coders, then you don't actually need the regulations to validate this, but it only makes sense once the framework is done. Because I think we had this conversation once before.
Yeah, you need to fix the step where the money first has to get in. So let's say if you work and get normal money from people and not paid in crypto, you need to fix that link because that's where the malicious activity can take place.
Yeah.
But if it doesn't, then the rest, of course, is properly functioning. Yeah.
So how do you think about the tokens at the moment? Like performance of tokens, is it only because of the lack of volume? Why are they not performing well? Do you think cash flow is a problem? What do you see as a token? For me, a token is a mechanism to transfer value to a person who buys it. And it's a better system because it's open, it's efficient, it's open to the entire world, which means if I profit share 10% of my revenue to my company, to my token, every person, Indian, African, Chinese, European, can all benefit from my work, which is illegal based on security laws. But because we have this technology now, it becomes more efficient. So what do you think is a token meant to be?
Yeah, I think you described it nicely because what you're referring to is more cash flow assets. So as you said, they are kind of like security stocks, but on chain, so you don't really care about that per se, or you do, but you frame it in a nice way. So if we just talk about utility coins where you say people are going to be paying for their data to each other, that's a bit of a meme because you need tons of volume for that, and it doesn't really capture
data marketplace.
Cash flow assets are more like buyback in equity or dividends in a way. You can establish it the same way. Like you can, let's say if your protocol collects fees, you can either burn your tokens, which is like equity buyback, or you can distribute the Ethereum without, or Bitcoin or whatever. Ethereum is easier to program, without burning it. So then you have dividends.
The dividends,
so that's the thing, like those make sense. Yeah. So then let's say this is a proper way to establish a protocol business model in a way. And then the question would only come whether you actually have paying clients, customers, and whatnot. And if you have paying customers, clients, and whatnot, but your value capture is not defined properly, then you will still end up with an asset being worth zero. And that's what we see now. Of course, many of the tokenomics haven't been done properly, but that's not really even the issue because there were no clients or users in the first place. Mm-hmm. So a business model, the same way as you make a governance structure in DAO, they just make things work better, but they don't make them work in the first place. Like if you have no users, not going to help you.
You need a positive feedback loop threshold in all blockchains.
So we see them going down more and more because there is simply no demand from you can have demand for altcoins in two ways. You can have like driving cash flow, as we mentioned now, or you can have speculative shareholders deciding that the network will be valuable at some point and they buy it. The latter has been significantly going down. We see YouTube videos getting 10 times less views. We see impressions on Twitter and on Telegram's activity. All of it is really, really down across the spectrum, which doesn't mean it's bad. It just was too much hype at the beginning. So now it's just to a little bit more normal level.
Okay. So you said the secondary market volume is down for altcoins, right? I had this theory that one of the reasons why the funding dried out is because there's no secondary market. Do you think that's because of the rise in Bitcoin derivatives? Because you can now 100x Bitcoin and pump a 1% increase, you don't actually need the low caps anymore. So if Bitcoin took away that one pure utility for the low cap, since they don't have cash flow, do you think that that could be the reason, one of the reasons?
I think it's just the volume. Like at first, let's remember ICOs, right? First, how it started. There were a few ICOs that made Moon Lambo really hard, extend,
Yes.
without too much money being in them.
Yes.
Then people are like, okay, this is a big industry, let's jump into it. They put in a lot of more money. And then at some point after Icon and whatnot, things started drying out.
Yes.
You couldn't easily invest 100 and then take it out at a profit. You would have to get lower. So you constantly had even fundraising volumes going lower. And now to even bootstrap liquidity, a team or someone else, third party, has to put in more in the books. And you're risking a lot because someone might be just, okay, there is the buy order, right? That's my way out. And then you risk a lot. So that's why I think the starting point wasn't, I wouldn't really say if derivatives, Bitcoin, or margin trading and whatnot was an implication here. I think it's just that the hype has gone down, and then it was just significantly worse for alts. Yeah.
So as CMO of LTO, how do you see your company running? Because that's probably one of the major things you have to do at the company, really address this issue of volume. As a publicly trading company, volume defines anything. If you have more exchanges running, you're probably doing better in ROI.
Yeah, so I wouldn't, I can't talk much about the exchange side, right? The typical
no, just like general.
It is, yeah.
Okay,
like,
okay, how
perfect.
do you,
liquidity
with your
is also
skill sets, get more people to talk about LTO?
Yep. Let's just start with something that blockchain is technology, similar like any technology, right? It can have different applications. So you have to view blockchain and like Bitcoin on the side of crypto anarchy, where you're full on privacy, full on censorship resistance and whatnot. And then there is the other side, application of the blockchain technology without having all of those things. So on the anarchy, I would say it's Ethereum, Bitcoin, maybe slightly Cosmos, which had maybe Tezos and Polkadot in a way, but depends. And then part of the market is just absolute like shit, right? Just like it's just trading, which is fine.
Shitcoin.
But it's just really like it doesn't even have any application whatsoever, like meme coins, yeah. And then some of them try to become cash flow assets. And then there is a much huger B2B market which just does blockchain technology without assets in the first place. So because LTO is kind of in between as a hybrid blockchain, that's why for us the bear market wasn't really an issue at all, because our target audience, of course, community is an important part, right? But I mean target audience for the solution and the paying clients. They have always been in B2B organizations and whatnot. And those, like all the people usually don't like to see partnerships like, oh, someone working with Deloitte, someone working with the government, because they look at those, but the coin is not going up. But that was simply because there wasn't the value capture. In our case, what we see with the market, and I guess everyone is moving really towards cash flow, because B2B market is insanely huge, and it's still highly inefficient in terms of what solutions there are in the pricing. So that's where we come in.
Yes,
with different kind of value capture and not value capture, with value added to clients who are in traditional world. You don't try to kill the banks, you just automate processes, you add security, whether it's certificates, timestamping in a way, data sharing, so the way data flow works there. Those are the things they need and where blockchain can help, yeah. So our asset, I don't want to call it for security purposes like a cash flow asset, but it more or less is the way it's captured, like, because you have to pay for the fees for the network, there is no inflation, so it's pretty general how the system functions. You can even calculate it, yeah.
I think we need some clear definitions of the security laws, and because many people say that the security laws are there just to hinder the growth of the industry, because as I usually say it, you can run a scam and that's legal, but you can't run a serious business in crypto, that's illegal.
Yeah, that's also true, yeah. I wouldn't really say that, like, people have been calling for regulations to be adapted to blockchain for a long time. I don't think there is much to adapt. Like, they're just trying to go for something very specific, but it kind of already exists what you need to know. So the rest of it is just, yeah. There are some things that prevent innovation because you hinder how society and economics work in the first place and the distribution models. But I don't think you should expect those to be legalized then, because you're asking for the establishment to change, which hinders their position, yeah. So if you're really doing something that's against how the system functions, then you just have to operate in that or close down. With LTO, it's really a bit different because we are compliant, both with the solution and with everything else. So for us, it's not really an issue. You could say it's a bit more boring for crypto anarchists, and we don't try to infringe on Bitcoin or Ethereum narrative at all, because we don't do like money transfers and whatnot. It's more about automation and technology. So that's why if you're really a fan of Bitcoin and things like that, that's like probably not for you then. It's a bit more on the application side, yeah.
Where do you see the market go? More towards, did we reach a point where we hit the maximum market cap we can get from cyberpunks? Do you think the market will grow more into
I like how you phrased
direction?
it. I like how you phrased it. Yeah, it's the same thing. Like if you look at the internet, and both of us are a bit young to fully know it, but I guess we read a lot of things and talked to a lot of people, is that you have, again, the cyberpunks, right? Which is a fantastic niche you want to be in there, but that always has a limit of growth. And then big companies who you hate, who are patent trolls, but they come in and they just have much more money. It has always been like that. So
this is the question, right?
Yeah.
Because this is the whole narrative of the entire space, right? And the whole narrative is, okay, we're in the fourth industrial revolution, or the second, depending how you see it, because we need to decentralize things. The cyberpunks were the right for 25 years, and we are finally here at the reckoning, and now we need to finally do it the way we should have done it from the beginning. Do you think that that's how we're going to go out?
I think it's a narrative that sells itself well, but people will constantly like, yeah. I mean, like there is a lot to say why I would phrase the opinion this way, but the fact that education will never be the same for everyone. It will always be a boundary for anybody to enter into any market. And for crypto, the level of entry is so high, you need to learn a lot, you need to understand it, that as soon as you start making it simpler, you start making centralized companies, which is okay, but then you're in a different market.
Yeah, because for what we mentioned before, in order to understand the protocol level where you can capture value and be an investor and have the security of unstoppable code, you first need to understand tech, read code, token economics, business models, more or less those four things, and then you can make really good investments with crypto. Or you can go to the IEO and just put money there.
And that's probably more profitable because
so that actually brings me to the next point,
that
right?
way. Yeah.
For me, I see a big problem in the space, which is problem. It's a big differentiation between equity and tokens, which is hyper-liquidity. If you have an equity holder and you invest into equity, you invest for one major reason, right? You think that if you buy this coin or buy this equity, it's going to go up, or you think this is the cheapest price that you will ever get to buy it at, because the next round will be in 2 years. You get the Series A, Series B, and between the seed round and the Series A is 2 years. So when you invest, you understand that, okay, there's probably no chance of me getting it cheaper. With good companies in crypto, like LTO, for example, I'm a fan of LTO, so I can say that this way. It takes time to build stuff, right? Clients don't just fall on the ground like most retail investors expect. So you can raise ICO money right now, and then you can buy the stock or the token in that sense the next day on the exchange, and very likely be able to expect a lower entry price than when you bought it by fundraising the actual company, because it's hyper liquid. LTO has been a company which was very good at both building fundamentally while also keeping ROI positive and keeping the community happy, which is very, very difficult in my opinion. Can you explain a bit how you as a CMO did that and what your thoughts on hyperliquidity are, and for maybe other companies tackling that?
Yeah, thank you for kind words. Have to point out you've been helping at the bootstrapping of LTO Network and growing. So big thanks to you as well on that one. Yeah, so let's start with hyperliquidity, I guess. How the normal companies appreciate in terms of the evaluation based on the work they put in. So then it's normal to expect the next round to be higher because you took more risk at the beginning. It grows now, pay more. That makes sense. With crypto companies at the beginning, there is absolutely no correlation with how valuation and market cap is compared to how much value and cash flow there is. Because people just say, oh, we raise 100 million because at some point it will be worth 100 million. But well, it might take 3 years to get there. And up until then, your market cap can actually go down by 90% as we see it, and might even decrease further.
Yes.
That also, in terms of the investors, that incentivizes people to jump on hype and just abuse the markets while the value capture is not there, which is something that you can say is good or bad, doesn't really matter. But if your product is skewed towards crypto people and your performance is not good, of course, your community sentiment isn't going to be great either. It really depends, like in the target audience you're trying to capture, right? For every crypto project, whether like even for LTO, whether it's a normal business targeted or crypto people targeted, price sentiment and liquidity are important, because if it's not there, people are not really incentivized to be around you, right?
Exactly, because
so you want
people
to change
hold the
that.
token because they can just buy it tomorrow or dump it tomorrow.
Exactly. And you
Right.
can't really, as a company, fix with it too much, because as soon as it's market tradable, usually, except a few, I guess, cases with big caps, you can't control the market, because you can only control it if you put all your fundraise money back into the market. But then you can do it, but then it's a huge risk. You might end up just killing the company and the token in the end anyway. So the issue I see with those huge market making things is that if you dedicate too much and you take too much risk, and it doesn't succeed, eventually both your company and your token die. And if your company succeeds and the value capture is fixed later on, or even from the beginning, you can just resurrect it, right? Because of course we see that price doesn't always follow value right away. But at the end of the day, if there is value rising, price will follow it. And if there is no rise in value, the price will drop anyway. So it's like, unless you're making the meme coins, but that's those exceptions, yeah. So I think how we LTO managed to do it, it was really, we didn't really focus on hype at the beginning at all. Like, it was a concrete marketing strategy to not do any hype, like zero, because you want to build a very low community. And it's always like that with communities in any market, right? You have like 1% percentages are just like approximate here. 1% of like developers and really hardcore understanding people who have also good positions and high network individuals. Those always come in, should come in first, because they build your foundation and your base. Then is the passionate speculators, so people who like, just because they like something like innovation, like they scroll on Product Hunt and like apps. There is no monetary gain there. There is no economic incentive.
It's just there.
They just like doing it. Yeah.
And
the rest of the people, are traders, speculators, and it's okay. You have to adapt to that as well. But the thing is that you shouldn't focus on the 90%, because if you focus on the 1 and 9 first, you get to build the hype anyway. And if you only start with the hype, it actually de-attracts those 1 and 9 in some cases.
Yeah.
So that's my perspective on it. Yeah.
Okay. And what do you
What do you think of hyper-liquidity? Okay. Yeah.
Okay. What do I think about hyper-liquidity?
Yeah.
For me, I really think about how can we solve this issue, because it makes it very difficult for people to build a serious company, because building serious companies takes time, and it takes a small community to test your product. And if you have a product and it works a little bit on the first day, then that's great, right? You are testing your product, you're growing slowly. None of these big companies became big in an instant. But hyper-liquidity expects you to do that, right? Be big right away. So there are only two ways to handle this. Either you play the game, which means one of the people in your company needs to understand how crypto is played because of the hyper-liquidity issue. Or the second option is you can do some kind of staking system where you invest your initial investors for the first year. They get to have nodes that run staking for a whole year. And that way you kind of have 1 year time in order to build whatever you said you're building, right? But I don't see the industry going into that direction. When I started in early-ish 17, the time between ICO and funding was probably a few days. It was very short and nobody was in. Then towards mid-18, the time between funding and listing was months. Okay, which kind of it made sense, but people really didn't like it, right? Because the major argument for tokens is hyperliquidity. And now we went back, and at the same time, none of these companies actually did anything, which is funny. So, and then we actually went back to the roots with the IEOs, where we now have the funding and the listing at the same moment. And it kind of goes into the wrong direction, because in order for you to attract investors, you need to reduce circulating supply or a very low valuation, right? So the valuation of the new coin on Binance is 20 million, but the ICO value or the funding is 2 million, right? So they only sold 10%, which means in order for them to get funded, they make it almost impossible for any long-term commitment from anybody, because 90% of the money will be dumped on you. So I see the industry going more or less exactly away from building sustainable businesses. And that's something I would like to hear more people think about, like, how can we solve this issue? I don't know much.
Is it an issue though? Because if you discuss about, as you said, yeah, it either has to be like, there has to be potential to grow, right? And people don't look at valuations, and it is changing slightly now, but still people don't care about valuations because hyper-liquidity. Hyper-liquidity implies that valuation becomes less relevant because if there are long-term unlocks, you can get out and in 10 times more. The smaller market caps, that's really the solution there because that's what traders look at.
Mm-hmm.
And there is no release, they will be incentivized to do it. But then the question is that, like, what are you really trying to do there? If it's just a fundraising tool where you will just go blank and not respond to the community for half a year while the token is finding its price, as you call it, I mean, that's an approach, right? As you said, I'm surprised you said you don't think the market will go towards longer lockups. I think you're referring to a different target investor persona there, because you see now projects like launching those incentivized testnets, like New Cypher is doing it with lockups then for half a year.
Right?
Yeah, staking. Then I saw today Coda is doing it for a huge percentage. So basically what they're doing, they're saying, okay, we're going to give you free tokens, incentivize developers and passionate speculators, which are those 1% and 9%, which is what you want, with a lot of money. But then you say, guys, you cannot sell it soon. I find that's quite a cool move, but I think it's going to be abused very, very soon. Like a couple of networks will launch it and people will be like, okay, need new. Because this is already becoming, to me at least, but I watch that a lot, becoming a meme there.
Everything is becoming a meme too fast in crypto.
You run a node and then you're like, oh, damn, waited more than half a year, shit still dumped, I'm illiquid, wasted a lot of time and money basically. So that's an issue.
That's the problem, right? So I think the security laws actually introduced this 1 year waiting period. That's in the law, right? You have to wait 1 year between funding and at least listing, because nothing's going to change fundamentally in the company after 1 week or 1 month.
Yep.
Right? You as a company which actually tries to do something serious and has a good market to be in, right? We're trying to help LTO in that direction too. Understand that well. To build a big business, it needs a year. It needs 3 years. But
it depends on what sales cycle is. Yeah. If you have like a retail focused app, your level to virality is probably quite short. And if you have B2B sales, your sales cycles are very long. Yeah. So you win bigger, potentially, but it's harder.
So you think that retail based apps are maybe more suited towards hyper-liquidity?
But they shouldn't have their token though, usually. So then it's like, they're hyper-liquid in terms of business, sure, but token, you cannot make the value capture model there smart enough. So it's like, yeah, especially with those apps, even in traditional world now. Remember the time of Apple Store games where people would just install it for a day and whatnot?
Yeah.
And then just delete it. The model there was to just make a lot of shit games, like Flappy Bird and whatnot, throw ads in it, get rich really quickly. But then it also died out very soon. So because attracting users now is incredibly hard. Attention span of a regular user is very low. The cost of acquiring a user are extremely low. Silicon Valley and other VCs were subsidizing tons of money to have users get in without paying for much. I know there was even a meme about people living in Silicon Valley, living off those free rides, free Uber Eats things and stuff like that, because they wanted user base, right?
Yes.
And for that, you need a lot of money. You need a lot of funding. And
do you think it's harder in crypto?
Yeah.
Because in crypto, the whole narrative about do not give away your attention for free. Everything is paid. Everything is micropayments. Be careful your data. Do you think crypto?
That's why I don't see media companies succeed that well in crypto. Like, as you see, every media and influencer, without being like negative about it, I like them. It's just that they are all dying out because your model is just based on the hype of a token, and if it's not there, it's just dead. Like, you cannot fix it much because your user base is going lower. That's why I see many of the crypto media probably shifting towards a bit more SaaS and being on the verge of blockchain and coins and assets. So then you're kind of in between the markets, and at least you don't die if one of them goes down. And that's what I see many crypto startups do, and even wallets now, trying to work with banks, trying to work with traditional enterprises, because there is just simply too much money there. There is too much money that you cannot disregard, And you cannot live without money. Everything has to have incentives. Your foundation is going to run out in 1 year, 5 years, doesn't matter. Going to run out at some point. So if you don't have any revenue making streams and sustainability, you're going to die anyway.
So where do you see crypto 2020? Like, we're 22 days into 2020.
Yeah, more enterprise and B2B really. Like DeFi is cool. I like DeFi, what it did to crypto. It revived Ethereum. It made a lot of cool applications, but I'm not personally sure how it will develop because the entire concept is based upon over-collateralization, meaning the system always going to be smaller than what it starts with.
Yeah.
So if you have 100 million in the thing, you're going to get only how much? 75? No, 150. Depends on collateralization.
Depends
ratio,
on
yeah,
purely decentralized,
exactly. So
semi-decentralized.
you want under-collateralized lending to actually ensure innovation because as stupid as it sounds, economics and capitalism are done in that way because that was the best way to make it then. And people still don't know what's a better way to make it.
Yes.
Because the problem with Bitcoin and the capped supply is that there is no real incentive for people who are whales and bought it at the beginning to become smaller. So it doesn't really remove the problem. It's just hyper-capitalism in that way. I'm not trying to infringe on the BTC narrative, right? I hold that. I think it has amazing potential, but it's still not the solution. So anyway, what was I talking about? I lost the thought.
Okay, 2020
blank.
crypto.
2020, more enterprise, more B2B.
More enterprise.
Yeah. DeFi will need to get outside of just on-chain money. Because if you build an application for on-chain money, the user base is basically on-chain money, but smaller. While the banking is like this. And you can't get that banking into crypto. So you have to work with them.
Are you bullish on these semi-DeFi apps like Nexo and Celsius?
Are they fully legitimate?
Well, you're completely insured.
Okay.
Like you got 100% insured. Like we put our money there. So shout out to Celsius.
Okay. Okay. Put your referral link in there.
No.
Yeah.
But yes.
Paid influencer.
Yes.
Yeah, I don't know. It makes sense. It makes sense, but then what exactly are they doing with it? Like, what's the benefit then?
Well, I think crypto first needs to figure out money because that's the obvious use case. Before we go to social media, before we go to governance, right? Humanity has been trying to figure out governments for 7,000 years, and now you're trying to figure out money, decentralization, governance. I think we're all over the place. And do you think 2020 will be another year where we are being hit with realization that we were a bit too much, too fast, or is this already over?
Too much, too fast for what? For killing banks?
Killing banks.
No, you have a choice, right? You can have a choice to hold in Bitcoin. I do that choice. I don't hold almost any fiat except my salary, which is just food and rent.
Yes.
Because if you just hold fiat, you lose to inflation anyway. So unless you have a good investment idea, which is not risky enough, then you're probably better off in some crypto assets or something more risky. Yep. But it depends on everybody. So you have a choice there. It's becoming bigger slowly and slowly. Will it overtake banks? I don't think so ever. Like, that's not going to happen. Can it grow much higher?
Let's call banks custodials, right? That's what we should really call banks. Because that's the whole narrative.
Yeah, but majority of crypto is actually custodial now.
Yeah, of course, exactly.
Crypto grows, but it's custodial. So what are you doing in the first place? Then it's just an asset class. Yeah. Then it's just an asset class. It's not actual use of money like that. You simply have it as exposure to something hyper liquid and with huge growth rates. Yeah, high risk, high return.
All right. So
what do you think?
About
where do you see it going 2020? Yeah.
I think what I see is that more and more I see Bitcoin as currency, maybe even Ethereum as currency, stable coins as currency. And I see, as we say, shitcoins or altcoins going to be stocks, simply because I potentially see tokens as a much more better technology suited for equity than equity itself.
That's true. The liquidity and the ease of digitalization for that,
yes.
Despite having digital shareholder and whatnot in the real world, tokens are still a much more liquid and easy way to do it. So there is actual business potential towards making it more liquid like that. Yeah, but it's not going to be utility coins. That's
yes. So from what I can see is I hope that many companies will realize that having a positive cash flow will mean, yes, you're giving away money towards a token, which you don't have to based on laws. But what most people don't recognize is you are sharing your money with the whole world. And in return, the whole world is sharing their money with your coin. And you potentially hold a percentage of that coin, which, if you look at the numbers, makes you more money than just keeping the revenue. So I really, really hope that more and more companies will realize that sharing money with the world makes you more money than being greedy. And that more and more coins will go to cash flow oriented systems. And this idea of cash flow oriented systems will drive the next bull run, hopefully, because people like coins, right? That go up. Now, what coins go up? Those that are pump and dumped, okay. Those that are scarce. Bitcoin goes up because we know that there's a very fixed inflation rate.
Which I think is going to change anyway.
Which is going to be even less, right? There's a clear narrative.
But there is research. Yeah, there is research that fees are not going to sustain the security, so it might even be upped, but that's like a separate discussion they're having.
Exactly, this is a whole different thing. Yeah. So if you are low cap with high potential inflation, then your benefit is that you can put your own money into the coin. You can buy back your own coin. And this gives you an advantage compared to the low coins, which have masternodes, right? Which have fixed, clear inflation. They have transparency. I prefer buying a Bitcoin because I know how much new Bitcoin is going to be dumped on me. Whereas in an ICO or small cap, I don't know it. But the cool thing is, if you're a serious business and your business grows and you do it like Binance, where you really put your own business money back into the coin, you build up a whole following, which puts their money back into your pockets. And it's like a sharing thing. So that's really
I
where
really actually like how
see
CZ,
2020.
yeah. Okay, CZ has been handling it really well. Like if you're a Binance holder or hater, doesn't really matter. You just really see professional vision there of how he approaches it. He has been doing tons of M&As, and all of them were in the sector where it made sense. Buying of competitors before they become too big, adding more features and whatnot. So there is a clear vision. He obviously likes decentralization and whatnot, but he understands if he just preaches decentralization daily, not going to move the needle. So you take it like a slow approach there. Will it fully become decentralized later on? No. Could it be? Yeah. I mean, there is always a choice, but it's up to the user to decide. Mm-hmm. So, and by giving that choice, I like how he's approaching it anyway. Yeah.
All right, good. I think let's wrap this up. It's been very long already.
What is your target for 2020? Personal though.
For Bitcoin?
No, just like professional targets, or no price targets. Like that's I find that more or less bullshit, to be honest, because no one knows. But like professional development.
I would like to see more coins except of exchange tokens to have serious cash flow into the token, right? We all know 2019 was the year of the exchange tokens. That's because they put money into the coin, because they had business, right?
And IO was the business, yeah.
Now, if you put a great business team, a product manager executing business development team together and make a great business, and you put cash into the token, you get Binance. Now, I see that many coins, many ICOs, they have people working at that company, which were probably rejected for equity, VCs, and so on. So the fact that these companies failed is not because they're doing a token. The fact that they would have never failed, they would have failed everywhere. Because I've seen so many ICOs just try, not just being scams, just really try and just getting wrecked. You know, like holding ETH, losing all your money. You raise $3 million. 2 months later, you have $1 million. Okay, hire a fucking CFO. That's a massive failure from the CEO in terms of risk management. So I want to see other coins except of exchange coins to have cash flow into the token. If we can achieve this in 2020, I think 2021 will be massive because everybody else will copy it. Everybody else will be like, oh, look, they're actually doing this and they're getting really rich. I also want to get really, really rich. So I'm just going to do the same thing.
Yeah, it's a positive incentive then, because it's not a zero-sum game. It's simply amplifying the effects of what you could be doing in the future because you already have some substance to add there. Yeah, that's fine. If you just do buybacks and whatnot without any vision for the future and actual cash flow, then it's a P&D. Yeah. I mean, be my guest, do P&D. Just tell me in DMs before you make it happen. I'll jump in and out, but I'll never talk about it.
Maybe. All right. So what about LTO 2020? Any plans? You want to give us a quick breakdown on what's going to happen in the next 6 months?
Yeah, a little chilly, I guess. Yeah. Last year was all about integrators and building it out. I know many say, but it has been built out to a decent extent. Layer 1 was always there, right? Adding a couple more features to layer 1, which allow more things for certificate associations and whatnot. We'll write about that more. But the two big targets for this, in terms of the business side, first of all, is this 3 products we are releasing our own. Those products are basically semi-centralized, if not fully centralized, but blockchain infused. Proofy, Fill the Doc, and Let's Flow. Fill the Doc is like fully centralized, like hardcore. Proofy is somewhere in between. Let's Flow is a bit more like Zapier, but with the blockchain focus, I would say there. So those 3 products, finishing them, releasing them, trying to make something out of them. So it doesn't mean that if one of, like, even if 3 of them fail, we still have the integrated strategy, right? And if even one of them succeeds, that's fantastic. So, because you've seen the traction on mainnet.
Right, you're just trying to get more potential product running.
Exactly, yeah,
LTO.
different streams, yeah.
And
that is strategy.
does, right?
Yep. It doesn't mean that the futures don't succeed for him, which they already did. But yeah, there is always an option that one falls through. That's fine, because the company is still doing cool. They're still making revenue. Yeah. And then the other one, doing more open source. So not hackathons like layer ones do for smart contracts, more enterprise hackathons. So
enterprise hackathons. So can you give me like a 1-minute pitch on that?
More like a government-sponsored and enterprise-sponsored hackathons. Like they still want open source devs, right? If you see even with banks now, everyone is trying to get into API after Plaid. I mean, people were already getting into it, but after Plaid, everyone got really crazy. So there is a lot of money in that later in it now. People understand if you don't work or build towards being an open source platform to at least some extent, you lose, because vendor lock-in is becoming a bigger problem daily. And that's why the acquisition costs per user are also rising all the time. So you have to be within the community, despite how you look at it. Yeah. So those are the 2 major trends, of course. And we'll go to Korea and China this year. Not sure when, but we have enough substance and foundation built out to actually go and knock on other doors, basically.
Yeah, I saw this with Rick and Brad mentioning it a little bit. All right, cool. Well, it was good talking to you.
Yeah, thank you.
One more thing, I need to troll you a little bit. One of the people asked me if you could mention a little bit about the voting process on the government on LTO when.
Yeah. We had an idea, I think even before Ethereum 2.0 proposed it, like to have burning transactions where part of, because we have non-inflationary staking, right? I absolutely despise inflationary staking, to be honest. I think it's like the worst meme ever. It's such stupid, it's such bullshit, to be honest, but that's a separate topic.
It depends, right? If you see it as a way for you to give you more time to build a proper cash flow building system, then yes.
Then yes, but they don't even have ideas for that usually. Yeah, because then you just inflate much more and then it just gets even worse.
Yes.
It's like fake it till you make it, but if you don't make it,
if you don't make it, then it's just faked.
Double wrecked. Yes, exactly. Yeah. We cannot do it for some logistical reasons yet. We are researching, we did research it. There is not like much rocket science behind it. It's also not illegal to do it, so that's fine. So we don't have any reason to say no to it. And plan to do it maybe closer to spring. All
right, cool. Well then, it was good talking to you. And
yeah, thank you for inviting me.
I'll see you soon in Amsterdam. I'm probably going to be coming over in a month or 2.
Perfect. Visit our office. We are in a huge one now, not ours. Yep. We're not rich enough to buy the office, but it's just a space where a company who was hosting it, just brief story, they kind of exit scammed. So there is no new tenant who can join, and we were here before, so we kind of in the space alone now, which is cool.
All right, good.
Yeah.
Anyway,
tons of tables to catch. Yeah. Okay.
It was good having you here, and speak soon. All right, bye-bye.
Yep, thank you. Cheers, bye-bye.